Ding ding, it is the top of the hour. Welcome everyone. Good morning, good evening, good afternoon, good night. I think that covers just about all the bases depending on where in the world you are joining us from. We are live currently right now here in the webinar, live in YouTube Streamland as well. Unless you're watching this as part of the recording, in which case you probably are aware of that as well. Either way, if you're here live and you know who you are, this is not a recording. Welcome, we are glad you're here. Tonight's presenter is John Carter, a professional trader since 1996 and founder of Simpler Trading. His work on pre-breakout patterns has helped capture 24.9 million across 10 major trades in stocks, futures, and indexes. Tonight, John is unveiling a new trade timing breakthrough he's been refining for over 7 years, built to help traders focus only on the high probability setups and ignore the noise that costs most people money. Well, the stage is set. The floor is all yours, John. Looks like the technology is cooperating tonight. That is always the hard part of the battle, but I believe we are ready to rock and roll. Take it away, sir. All yours.
That for whatever reason, I thought today would be a good day to do a really hard core workout with a trainer a couple hours before this. And man, I'm lagging a little tired here, but that's okay. Sometimes something like this, when you kind of got to go through something that you're excited about, get you excited as well. And we'll see if that can offset the grinding post core workout fatigue that had set in there for a little bit. Ooh, so good times. All right, so first of all, welcome everybody. Happy Wednesday, February 18th. We've got some interesting markets. They're up, they're down kind of every day, which is great for trading. Although sometimes not as good for like swing trading if you like to stay long for a couple weeks at a time. Obviously, it's a little bit more volatile right now, and that's okay. There's always a time frame to look at. And so what we're going to talk about tonight is kind of the current state of the markets, the best setups that I see that are out there, and then some of the tools, obviously, and things like that that I really appreciate for this. And yep, good to see everybody here. Questions and comments are welcome. Lorna's very adept at asking questions, um, handling handling the riffraff. So bring all you got. It makes it more enjoyable. So, disclosure, I always say, like, if you're new to trading, learn the basics. Don't sell naked calls or naked puts or things that can lead to insurmountable losses. You got to dial in that risk, dial in that position size, or it could get very ugly indeed. So, crazy markets. It's funny right now because the markets aren't very volatile, but they are divergent, discombobulated. So you got the S&Ps looking like they're like, okay, we want to break out, but they're being held back by the Mag 7. So this is the Mag 7 index, well off its highs and certainly not looking great. You got Google and Apple looking good, but Microsoft and Amazon not so much, and so it's kind of lagging. And since the S&P, the Mag 7 is like over 30% of the S&P 500, then it's gonna be hard for the S&Ps to explode here without the Mag 7. So that's what I mean. You got some divergences here. It's normal. You get moments where there's distribution in one sector and it's money's piling into another sector. And it's a little more interesting if money's just piling into everything because you just buy something and you don't really need to be too precise about it. But in this kind of a market, especially, you do have to be precise. Or you can spend a lot of time kind of languishing in the land of why does everything I touch turn to crap, which can be frustrating as a trader, especially if that's something that you enjoy doing and you want to actually make a living doing this. So that's what we're going to look at. So, I started off, I worked an entire summer. I think it was my junior year of high school. I went to Southwest High School in Fort Worth, Texas. And I saved about $1,000, making $4.25 an hour. Of course, my overhead was low because I lived at home. But I remember toward the end of the summer, I came home and my stepdad, he was a broker. He had a couple of buddies. He still is a broker. He's 80 today and going strong, super fit, plays golf every day. And well, wealth manager is the more correct term. And I heard them talking about options and Intel. I had no idea what either was. They talked about how they were going to, buy some calls as a run up into earnings. And I said, hey, I'd like to do this. And so I didn't have an account, and I wasn't 18 at the time. So one of the guys spotted me. He said, look, I'll buy 10 call options for you. If it doesn't work, you owe me. You're going to have to pay me. But if it does work, I will give you the profits. This way you can learn. I'm like, okay. So a couple of weeks go by. My dad comes home. He hands me $800 in cash. And he says, the trade worked. Here you go. And so I had this kind of moment of clarity where it's like, wow, I worked all summer to make $1,000, and here with just some idea and a transaction and putting up some risk capital, I made nearly as much without having to schlep cookie dough all day. So that was a really good aha moment for me. And that led to booms and busts, which I'll talk about here in a second. But it also led to some pretty amazing moments where trades, this is a trade in Tesla, turned into a little over a $3.5 million trade. And, along the way, I've just had kind of some really kind of fun trades and have learned a lot. And I always say, like, look, I've gone through this. I've been doing this for almost 30 years now. I've gone through all the pain and suffering, so you don't have to. I've made a lot of mistakes along the way. And so the idea, of course, is if you want to do this, you want to make fewer mistakes as you go. So, I think coming of age moment in trading, I had been doing it for about 8 years. I basically knew what I was doing. I had a $150,000 account. I worked a corporate job. I was making 100 grand a year. And I was also making, off my $150,000 account, I was selling options and making $5,000 to $8,000 a month off of that. And I was like, wow, this is great. Why don't I get to the point where I just do this full time instead of also working? I didn't hate my job, but I could see that there would be some, a little bit more freedom in terms of just being able to trade. So about this time, the job I was working at, they transferred me to Minnesota, more responsibility, more snow. And my fiance, now wife at the time, said, hey, look, the snow is really bad. We're living in this apartment. I can't even start the car. Can we please get a house with like a heated garage? I'm like, okay. And so we found the house we wanted. It needed a $30,000 down payment. And I told him it would just come from my trading account. So about a week before closing, I had this moment of clarity and said, gosh, if I wire 30 grand out of my trading account, it's 150,000, then it's going to be 120,000. And then it's like, oh, God, I'm going to be like a little bit behind the 8 ball, and I'm going to be trying to trade to get back to that 150. And, of course, I needed to do this while I still had a job so they could show, I could hit the mortgage payments and stuff like that. So about a week before, I had this great idea, quote, unquote, that I would just do like a big trade, make 30 grand. My account would go to 180. So when I wired out the 30, I'd still have 150. We'd close on the house. And at that point, I could quit my job and live happily ever after. So what happened was one of the more horrifying experiences. The market was in a downtrend. This was in like the mid 90s. I bought puts on the OEX because we were rallying up to a trend line. And I put half my account into this trade. And pretty soon I was up 5 grand. And then I went ahead and put the rest of my account in it. And pretty soon I was up 12 grand. And then the market closed. And I was like, oh my God, the markets just need to dip a little bit. I'll have my 30 grand and this is going to be great. You guys probably know how the story is going to go now. The next day, the market's gapped up. And I've been trading long enough to know, like, okay, the trade's not going to work, but the market can fill its gap. And then I can get out. Like, I'll get out. I'll be bruised, but not broken. Well, yeah. So it gapped up, consolidated, and then just rallied. And it did that the next day. It gapped up, consolidated, rallied in the close, gapped up the next day, consolidated, rallied in the close. And I don't even remember this time. I was like a deer in the headlights. But the point of the story is that by the time I realized I needed money to buy the house and I liquidated my account, my $150,000 account blew up. I had $8,000 left. I had to go to the bank. I maxed out my credit cards because I sure as hell wasn't going to tell my wife, fiance at the time, what happened. And we managed to get through closing. They kept asking, like, hey, I thought the funds were going to come from your investment account, but it came from the bank. We got to verify where these funds came from. And so I just acted really dumb. which wasn't hard. And anyway, we got the house. So that really kind of established my soul searching journey. And during this time, I stopped trading, and I found Mark Douglas's work. And I read Disciplined Trader, and eventually Trading in the Zone. And then I ended up working with him. He was my coach for a while. He would come speak at our events. We became good friends. And what I learned from all that is that when you chase the money, you will destroy yourself and those who depend on you. And you've got to have patience to wait for the setup. And if you have the patience to wait for a setup, the profits will take care of themselves. That's another thing another trading mentor of mine said. There's a lot of traders out there, and none of them are born with the patience gene, and only a few of them will learn it. And the only ones that can do this for a living are the ones that learn it. So patience and having a setup. But the other thing I've learned along the way is if you are in a sloppy stock, the setups won't pay off. Microsoft has had multiple daily squeezes over the last year, and almost every one of them was an absolutely waste of time. And even if you learn patience to wait, if you end up waiting for the wrong stock at the wrong time, the end results are the same. It's just frustrating. Okay. Now, another career-defining moment. It's always interesting since I've chosen to do this kind of publicly. My moments happen publicly. This was on, I believe, January 14th, 2014, and it was my biggest day trade. This was a day trade, and I just recognized what was going on in Tesla. It was like a short squeeze, loaded up on calls, and it was my first $1 million day. I sold half at the close. We did this live in our trading room, and then I was going to sell the other half at the open. I got about 3 hours of sleep that night. I woke up at 3 in the morning. I started watching the futures. I couldn't sleep, so I just stayed up, gapped up, and I sold the rest. It turned out to be a $1.5 million trade. And that was a life-defining moment because, obviously, A, it was a lot of money, and B, it really got my arms wrapped around the idea of being patient and waiting for these bigger moves. Okay, when stocks are just kind of schlepping around, you can kind of grind yourself into dust. But if you're patient, if that was the only trade I'd done all year, it would have been an amazing year. So it really got me to thinking, why trade a lot more when I could actually trade less but focus on better setups? That seems like a better way to do this. So one thing I have been really good at doing in my entire trading career is taking money out of my account and putting it into tangible assets. When I blew up for the Minnesota house, I had been taking money out of that account and buying real estate, like rental properties. And so when I was able to, guess how I got my next stake in trading again, I was able to I sold one of the rental properties, and that gave me my next trading stake, like $50,000 or $60,000. And so when I got the money from the Tesla trade, one of the things I did is say, hey, we've always wanted a place in the country, and we got this ranch, and we still have it today. The only difference now is there's zebras and things like that running around, which is kind of fun. I had to build a high fence, which, oh my God, I didn't know that was going to happen. But trading has given me these opportunities where it's like, wow, I never would have thought it would be possible to kind of own a ranch. And I was like, okay, well, let's take this money out and put it into something tangible. And that's something that we've continued to do. Use trading money for specific things like that. So that never would have happened if I'd been, in the wrong stock, okay? In a squeeze setup on the wrong stock. And, finding good trades is easy. There's plenty of good setups out there. Finding great trades is hard. Because what's that little extra? What's the difference between, that really move versus that kind of, lackadaisical, kind of move? And there's so much information out there vying for attention, distracting us, making us go this way and that way, and, trying to catch 10 rabbits, and you end up with none of them, right? And the vast majority of the information out there isn't really useful, and oftentimes isn't even true. If you're listening to something on CNBC, they're, hey, I really like this stock. They're probably selling it, and they're trying to create demand so they don't move the market too much. So you got to understand that a lot of the information out there isn't really for our benefit. It's for somebody else's benefit, typically on the other side of the trade. So the final Minnesota house lessons was that the idea that success comes via simplicity and focus. And distractions are designed to lock people in to mediocrity. Chasing 10 rabbits, catching none, while getting high on dopamine. That is a life that is fun in the moment, but does not lead anywhere. So we succeed when we simply lock in, simplify everything, and just block out the distractions that are coming in. We don't need to know everything. In the markets, you do not need to know everything. You just want to own one or two setups and understand those setups. And that's it. You don't need to understand what else is going on. In fact, it won't even help. So one of the best things that has helped me in trading and other traders that I've talked to is to really understand your why. Because otherwise trading becomes a video game. It's not real money. It's just numbers on a screen. And that's when you can get really dangerous. It's chasing an emotional high and doing it again and again and again. And that leads to a lot of frustration, a lot of ups and downs, and blowing up accounts. So know your why. And throughout trading, I mean, things like, Maria and I have been married, 30 years coming up here at the end of this year. Raising a family and all that kind of stuff. But it makes you really kind of dial in and say, okay, well, what do we want from this? Because it's not just about the money. What are we doing with this? And so, the opportunity to, going to Africa, teaching, I love this picture of Dylan. He's like, wow, I've heard this too many times. But, working with kids in Africa, and we're showing them economics, bringing the dog, having an office where you could bring dogs to work, which was great. Here we're just doing a talk here with Lance Armstrong. That was fun. Out here with Richard Branson in Africa, all these fun things. And it's just like, these are tangible things. And so I'm sitting there and I'm trading. It's not just about, chasing numbers and numbers on a screen. It's and I keep gold and silver coins and cash underneath my monitors as a reminder that, we're changing this digital numbers, wiring it out and turning it into something real and tangible and not just on a screen. I just think that's an important part of this as well. So the basic OG squeeze was absolutely life-changing for me. It gave me, for the first time in my trading career, a high probability moment in time where I could take action. But I noticed when I had to explain it and hone in on the why I chose one squeeze over another, I was also bringing in a lot of information on moving averages, chart patterns, stock behavior, short interest, and overall intuitive knowledge, which I understood just because I'd been trading for so long and watching the markets for so long, but I could never explain it in a way that was simple to understand. And so the OG squeeze, this is the one that got me my Tesla $1 million trade. And this was kind of the first time where I was like, gosh, this is great, because the squeeze is simply an indicator that highlights a high probability moment in time where the market is building up energy for a bigger than usual move. And the OG squeeze got me started, and it caught my first big trades. However, after using it for about 10 years, and it was great, but I noticed that it wouldn't show up sometimes before a big move. Case in point, this is Micron Technologies. This is the OG squeeze. And here was the classic consolidation that normally a squeeze would pick up. But, this Micron had been, I guess, so volatile here that it just wasn't getting quiet enough for it to do it. And I thought, okay, well, this is now costing me opportunities. So let's look at this and do some work on it. So we did a lot of back testing, and we came out with the Squeeze Pro, and I think this was in 2019. And the Squeeze Pro was great because it's like, well, here, where the OG squeeze didn't even register that there was the possibility of this stock releasing energy to the upside, the Squeeze Pro did. It's like, oh, okay, look, there's some consolidation happening here. Get ready, because this could happen. So that was the Squeeze Pro, and essentially what the Squeeze Pro did was give a little between 2 and 3 more at bats on any given chart. On a daily chart or a weekly chart, that was great. Sometimes on an intraday chart, it became very noisy. But the main point was that now there were more at bats. But at the same time, if there were more at bats, maybe some of the quality wasn't as good. And so those are some of the things that we noticed there as well. So the Squeeze Pro set up more at bats and even gave a heads up when the OG squeeze was about to form. So that was also helpful. However, with more signals came more questions. Okay, so of these 40 squeezes, which one should we take? How can you tell if this squeeze has a better chance of signaling the stock is ready to move higher instead of selling off? How do you narrow it down for the best ones? And really, most importantly, and the longer I do this, the more, it's J. Paul Getty in his had a famous quote. They said, what were some of the biggest, most important things that you did to get rich? And J. Paul Getty said it was the deals I passed on. It's like the most important thing were the deals I didn't get and didn't do. And I thought that was pretty fascinating. And I think in stocks so much, I mean, you could look back on a year's worth of trading and say, man, if I could just hadn't have done those 10 trades, my results, would have been so much better. And so a big part of this is learning which one to avoid. So the questions that force refinement, and these are questions from my kids. Dad, this is overwhelming. I don't get it. This is frustrating. I want to learn to trade, but it's not sinking in. And that's all the stuff. So it really motivated me to kind of dive in and put together a squeeze that would just answer all these questions. So over the years, I've noticed 4 main things about the best trades I've had. The squeezes were mostly super clean, or they ended up being super clean by the time they triggered. So the first thing I want to do was highlight when a squeeze exhibited the behavior of an ideal setup to the long side. Okay, not maybe, not, okay, this is close enough, but the specific things came together that this was an ideal setup to the long side. Okay, so why only the long side? Because for a stock to move significantly higher, everything needs to be lined up. All it takes for the stock to go down is a lack of buying. I'm a fan of a shorting, but you don't need a strong short signal to do okay at shorting. You just have to know when to not fight the trend. But for a continuation move to the upside, it requires a lot of energy, and it does need to be more precise, and more specific things need to come together to give you the highest probability of success. Okay, so here's the Squeeze Ultra now. So we had the Squeeze, the OG Squeeze. We replaced that with the Squeeze Pro to give more at bats. And now what's been updated is the Squeeze Ultra. So what is the Squeeze Ultra? Well, the Squeeze Ultra, we'll sit there and highlight, and you'll see these little arrows here, is that when these arrows pop up, that is the ideal conditions for a trade to the long side on that particular stock. This happens to be NVIDIA. So here's the arrows, great. While their arrows are there, that's the ideal time to accumulate. And then you essentially, what the squeeze does is then when you see these histograms take off, you can stay in there until you start to see a loss in the histogram. Okay, so there's boom. Here's another one. When you see that's when you're accumulating the stock. Then it releases energy, and then when you participate in the move, you see the arrows. You accumulate the stock. Once the arrows go away, and then you just kind of ride the wave. So that's the idea. So now it's just kind of like, okay. Because the biggest thing was always like, well, when do I get in? Well, it's like, okay, well, when you see the arrows now, you don't have to have all these different things come together. And so what's important about this, there's a lot of reasons I really like this, but what's important about this is that first, it was super easy to show my friends, show my wife and kids. I got a lot of friends that are like, oh man, you're trading. Can you show me how to trade? I'm like, oh my God, no, I can't, because if you're just getting into this, I'm really not the guy that's going to be able to have the patience to sit down with you for 10, 12, 15 hours and answer all your basic questions, because there's so many resources out there that can do that. However, with this, I can say, look, just put this on your chart, and when you see arrows, you buy. That's it. And it became so much easier. So when do I get in? When you see the arrows and the price is between the 8 and 21 period EMAs. That's it. If you see a squeeze with no arrows, you just pass. You just, why take a, and it may work, but why take a potentially meh or mediocre setup when you can put your hard-earned money into only the best setups? And so that's what I really, really like about this. So here's the thing, and of course, I've traded Tesla. I love Tesla. You'll notice this daily chart here. There's a squeeze right here, okay? You'll notice here, though, that there are no arrows. No ideal, okay? This squeeze ended up failing. Here's another squeeze that was setting up. And you'll notice there's no arrows, no ideal. That was another squeeze that ended up failing, okay? Now, this one actually looks like it wants to go to the upside. Ultimately, it doesn't. the ideal conditions were not met, okay? And it very clearly stated, like, hey, this really isn't an ideal one, so pass on it. On the other hand, this one was very much ideal. Now, it didn't take off right away, and you kind of had to sit here and you accumulate the stock or buy options, but eventually it paid off. And then another squeeze set up, and again, no ideal. So here's 4 squeezes on Tesla, and instead of taking all 4 and having one huge winner and 3 losses, you essentially just focus on the one trade. Now, to be fair, this was not a long squeeze because the momentum was below zero and all these different things, but you get the idea. It becomes crystal clear, hey, when there's arrows, that's when you want to get to the trade. So what I really like about this is that you know the ones you know in advance to pass on. So the idea that there is a visual arrow when the ideal conditions for a long squeeze are currently present will save you so much time, so much money, eliminate so much confusion and so much frustration and doubt. You not only have confidence when to pull the trigger, but more importantly, you have a clear signal to pass on this one and be patient for something better. I think that's just huge. So why fight for table scraps when you can be patient and wait for the prime rib? I love this chart on Microsoft. Microsoft, for the last year, has only had 5 days all year where an ideal squeeze set up. And it was a nice little pop, but otherwise, it just hasn't been clean. Now, you can see here this squeeze worked. Now, to be fair, this was also earnings. So I typically am not holding through earnings. But basically, every other squeeze was crap. And so this saves you a lot of time because guess what? Microsoft is merely a playground to play in, and sometimes it's a good playground and sometimes it's not. So when you see something like this, you're not getting a lot of ideal squeezes. Guess what? There's other stocks out there that have them, and so that's the playground that we want to go to. So here's the other thing that I found with this. And everybody's got different ticks as a trader. My tick is I tend to get in too early. If I see something I like, if you have a hunch, buy a bunch. Don't be a dick for a tick. All the things. Don't be a weenie for a teeny. And so what I tend to do is I tend to get in a little early, and I don't mind holding through the mess, but it's not necessarily something that I strive to do. And so if I can eliminate holding through the mess, that kind of also eliminates a lot of portfolio volatility. Now, this was a trade. This is the biggest trade I ever did. And it was about $5 million over 2 accounts. And so here was the squeeze. It was setting up. And during this time, I was like, okay, I'm going to buy any pullbacks to the 21 EMA. I'm going to buy my stops -1 ATR. And during this whole time, stops never got hit. And I entered in it multiple times, but the stock would not break out. Okay. And the squeeze wouldn't fire for a while. So during most of this, because I was buying options, and especially during this last week and a half or so, I was underwater on this. I was posting this in the room. We were doing this trade. It was hard to hold on to. But then when it took off, it had a huge move from, of course, this was pre-split, but it went up about $230 a share in the matter of 3 days. Okay, so the payoff finally came. Now, this was a trade that I did across 2 accounts, and in Tastyworks account, it was a total. There's other trades going on here too. I mean, that was a nice trade in Amazon and all that too, but it was about an $818,000 trade in Google on that particular day. And then in Thinkorswim, I had a larger position, and that turned out to be a $4.3 million trade there on that. Now, prior to that, for 3.5 weeks, this was a losing trade for the most part. These, and some of these were, you can see there's put credit spreads here. Sold this for 15, bought it back for 50 cents. And here was a call option. We bought it at 44. We were able to sell it at 169. And then the real money came from some of these debit spreads where buying it for $9.50 and then selling it for $57. So it was a variety of structures and strategies, all designed to help minimize theta decay while waiting for it to go off. Now, look at this. Here's Google. At the time, I did not have access to the Squeeze Ultra. Imagine how much time and frustration this could have saved by just knowing that the ideal conditions for the squeeze really happened toward the end of this run. And so what I really love about this is that here's a trade, because I remember this trade vividly because it was such a pain in the ass. It caused a lot of, it's like, man, okay, it's still there. It's still there. Let's be patient. Let's be patient. And with something like this now, it's really just not having to sit through kind of the, any doubts or worries or frustrations. And especially because a lot of times I post these trades publicly. So I also field questions about them. So I like to, how can I do this in a way where I have less questions to answer? And, when I saw this, I was like, gosh, this is great. So even if I see something that I like, I can just check it every day and say, like, okay, have the ideal conditions come together, yes or no? And I can just look at the charts. Okay, so great. So the squeeze, other markets. Yeah, we're going to look at silver. I actually look at it out of the dollar and euro and stuff like that too. All right, so the squeeze ultra pinpoints the situations where the ideal conditions for a high probability squeeze all come together. And that's the first thing, okay? Of course, there's more. In addition to identifying the specific conditions for an ideal squeeze, I also discovered that different squeeze settings work better on different time frames. Now, what I have not understood over the last 20 years is that this is one of the main parts that I understood intuitively but could never explain. Yes, I'm taking this 30-minute squeeze, and no, I'm not taking those 12 other 30-minute squeezes. But why? I don't know. This one, look at this. This is obvious, and these other ones aren't. Well, it turns out it was obvious to me because I'd been staring at this thing for over 10,000 hours, but it wasn't obvious to someone who, hadn't been looking at it for that long. And that was just something I could never explain. And, and again, I want my kids to be able to use this. If I'm not here anymore to explain it, then it's not really going to be useful to them, right? And so there's a lot of intrinsic motivation for continuing to refine this. So talk about a rabbit hole. So how to address this? First, of course, I want to define what super clean is and put that in the settings and highlight when super clean is in the house. But here's the part that I never got before, is to hone in on the best settings for each time frame. Now, I spend most of my time doing swing trades, or most of my time with the squeeze has been on swing trades. And so typically it's daily charts. And so that's the time frame I mostly focus on, though I will and have focused on weekly charts and 30-minute squeezes and things like that too. Well, it turns out when we dump everything in and you look at this for different time frames, is that the squeeze settings on a daily chart that are ideal are absolutely not the same as a squeeze setting on a 30-minute chart that's ideal, okay? And this was really a big aha moment. And this is something I recognized intuitively but could never explain, because the original squeeze and the squeeze pro, they all utilize the exact same parameters no matter what time frame you were on, okay? And so again, they were kind of ideal for the daily charts, but not necessarily ideal for other time frames, although they worked, but I intuitively had to kind of filter them out. So by different settings, there's a combination of, is it an SMA or an EMA? 20 versus 21, okay, on the daily charts and weekly charts. On intraday charts, is it 13 or the 8 EMA/SMA? And what settings? 20 and 1.5 or 2.3 or 2.0 and 1.5 or 2.3 and 1.7. So all of these get dialed in, and on specific intraday timeframes, those alternate settings work a ton better here. Okay, so the variety here is actually kind of endless. And so when I first talked to Lorna about this, she immediately caught my vibe. That's how I vibe code. I just say, ask Lorna, hey, can we do this? And then she goes out and then comes back. So at first she coded a tool where we could all just change all the squeeze inputs manually on all time frames. And I thought, great, this is it. We can release this and then people can play around with it. But then it turns out that just because you can play around with it doesn't mean you are going to find the best settings. And in fact, a lot of the settings are a waste of time. So it was a total nightmare. And so what we found is, after collectively thousands of hours of analyzing and running tests, is that there were actually specific settings that work best on specific time frames. So it's like, well, we don't need to open this up for experimentation because we already did that. Let's lock it down. So now we get to the meat of the matter. The Squeeze Ultra does two things that the Squeeze has never been capable of doing until now. First, it highlights when the ideal conditions for the highest probability squeeze have been met to the long side. Now remember, we talked about ideal conditions for a short, but then all of a sudden you have a lot of arrows. And frankly, a lot of down arrows. And what you don't want in a signal is confusion. You don't need over signaling. And so it was my decision to say, you know what? Let's only show ideal long side. At some point, if people are really like, God, I really want to know ideal short side, we would just release that as a free upgrade. Initially, though, I honestly don't think it's necessary. If we can highlight the moments in time where ideal longs are in the house, then anything that's not an ideal long technically could be a short. Okay. And of course, there's moment. This is all stuff I'll talk about in the Saturday class, like how to identify shorts. But the most important part is how to identify longs. So the second thing, though, and this is, I mean, it's bigger than big. The Squeeze Ultra will automatically change to the highest probability inputs based on the time frame you are using. Okay. Again, the Squeeze Ultra will automatically change to the highest probability inputs based on the time frame you're using. You're on the daily chart, you switch it to the 30-minute chart, it automatically changes the inputs. So now you're looking at squeezes on a 30-minute chart that are ideal configurations for a 30-minute chart instead of a daily. Okay? This is just something that in doing this as long as I have, I never even thought that was something that was a possibility. But then I remembered, like on the 30-minute squeezes, I would never take all of them. I'd only take certain ones. And again, that's kind of that intuition where it's like, oh yeah, this one's going to be a really good one. So, okay, so what can we use this for? Now, here's the other thing that's interesting with this. I rarely have used squeezes on small time frames. 5-minute charts. I'm like, why bother? You could do a squeeze on a daily chart and you're going to get a much more meat on that bone. But then, with the Squeeze Ultra, we've got the ideal parameters for a 5-minute chart, and then B, we can see without a shadow of a doubt when you have an ideal long. Because before, 5-minute squeezes, they're up, they're down, they can be all over the place because it's an intraday chart. Intraday charts are messy. But what's interesting here is when we look at this, so, here's a nice little clean squeeze here. It's like, great. We got the arrows. Cool. It's a long. We got the ideal. Great. It's a long. Notice here the parameters are different too. I talk about different parameters. You can see that the Squeeze Pro, you had black dots here, but down here they're like orange and red. It's different parameters, right? And then here, on the Squeeze Pro, this has been sloping down. And here, you're already turning back up. So again, different parameters. But what I like about this is that when I see the arrows, and again, the 5 minutes not going to be as powerful as a daily or anything like that. That's a kind of a heads up that it's really trying. Now, it's going to be different, at 3, 4 o'clock in the morning. I typically only look at the cash session. But when I see the arrows, it's like, okay, I think we're going to get a pop here. When I see the arrows, all right, I think we're going to get a pop here. Get to see the arrows. Okay, we're probably going to get a pop here. And if I don't see arrows, then by default, especially on the indexes, because the indexes by design revert back to the mean. So if I see a squeeze without arrows, by default, that's almost always a short, okay, or something to kind of be careful of or fade it. And so the beauty of the futures, if you like to fade moves, the indexes are set up for that most of the time, and then the Squeeze Ultra really helps with that. So on something like this, sometimes I'll trade the NASDAQ futures, but I'm a fan of also trading, especially towards the end of the day, options on NDX and, of course, SPX, because they do not price in the potential for a gamma squeeze into the close. So on this, we bought the 25,050, 25,100 call debit spread on that last squeeze there at $5.43 and $5.90, and we scaled out 20 to 25 minutes later. Half at 20, okay, another quarter at 30, and then in the last quarter at $40 bucks. So it's $43,000, $43,725 in about 20 minutes, all because of that last kind of 5 minute squeeze. And on just the last 5 contracts alone, made $17,000. So that we talk about on something like this is when you get a move like this, especially kind of with zero DTE options and how cheap they are. That's when you can get options that go from 5 to 40, and it can be pretty fantastic. So on this, and this is how we do it in the room, just say like, all right, in case this gets a little silly to the close because of that ultra squeeze, here's the debit spread. We got them at 625, 580, and 543. All right, great. 14 minutes later, let's sell these for 20. Great. 5 minutes after that, let's sell the last quarter at 30. And 1 minute after that, let's get the last one out of here at 40. And so, those can happen pretty quick. And it's some big money. I mean, you're on these, it's like, six, some of them are, you're getting a double, you're getting 6x. I mean, it happens pretty quick. And the same thing here on the S&Ps. On last Friday, we had a beautiful squeeze setting up. Into the close on the 5 minute, and we got that pop. And then same thing here. These were lower price. I did bigger size, but we bought about 100 contracts, debit spread for $275, another 100 at $275, and then sold half at $4 and half at $5. And then that was good for $34,000 in less than half an hour. So that was, again, a little bit different strategy and stuff like that, but same, all based on that 5 minute squeeze into the close, which is pretty good. So the last half hour is pretty unique because the options are so cheap. You can, that's where you can get things for 50 cents or $1, and you're selling them for $6 or $7. And, some days I just wait till the last 30 minutes because that's when you get the biggest asymmetrical risk trade setting up, depending on what's going on. This was also kind of a day trade in Google. So again, 5 minute chart. We had a gap up after, gap down after earnings, but then we got some nice squeezes setting up here. So we bought calls at $12.38 and then sold them to the close at $18.50, just based on these kind of continual squeezes that we're setting up, and then also posted these in the room as well. So again, and that was nice. And again, before that, I never really took a lot of signals off the 5 minute chart because I'm like, there's bigger fish to fry. But in this kind of a market, especially because it's pretty volatile and it's up, it's down, I found that to be super helpful. Now, the other thing that's important here is that if there really isn't anything to do on the long side, okay, it prevents you from buying the dip, okay, because it's like if you're buying this dip, it's just very painful, and there's no reason to just stay in pain. So no ideal squeezes down here. And keep in mind, if there's not arrows, then by default, it's probably a short trade. So here's some dots. Geez, which way is this going to go? Keeps going lower. And yeah, we did get a little rally into the close right here, but then the next day the selling just continued. And this, in this case, it was not an ideal squeeze. It would have worked, but again, the specific conditions for a long squeeze didn't come together on that one. I'll even use it on a 2 minute chart. Now, obviously, a 2 minute chart is very fast, but especially toward the close, if I see the longs, long here, great. I'm just kind of looking for a little pop. These are our quant pivots. So, okay, let's go test that upper pivot. Not a huge move. It was like 15 points, but certainly very tradable. And again, when there's a squeeze and no arrows, by default, you're just looking for a move lower. So it makes it a little easier to kind of decipher some of the moves that are happening there. And again, remember that on the 5 minute chart, the parameters are automatically modified for the settings that best work on 5 minute charts. And we can clearly see when, in this case, any of the squeezes here, when you have a lot of arrows like this, generally you also have a very strong and steady uptrend. Okay, so it kind of gives you that reassurance that this thing isn't going to fall apart. This thing isn't like, we had a nice rally today. I went to the gym to work out and came back, and it had given up a lot of it. So right now we got to, on this particular day, which wasn't that long ago, it was able to kind of hold it right, hold it for more than 3 hours. Now, so does this trade work 100% of the time? So the answer to that is, of course, there's no indicator out there that works 100% of the time. However, what we want to look at is what does a fail look like? So this is Google. So here we got the ideal squeeze, And here's the setup. And you can see ultimately it did not work. We went from about $250 to $240, and that stopped out. It ultimately ended up going higher, but this was a trade it was stopped out on. Now, not long after that, we got another ideal squeeze setting up, and this one was pretty much ideal. And in this case, it ran right into earnings. Up to you if you want to hold through earnings or not. I typically don't, but I don't mind doing a play in earnings. Another ideal squeeze here, boom. Beautiful ideal squeeze here, boom, and so on. And you'll notice here that there was a squeeze, but it didn't show up as ideal. So, this is important because it's like if you've been trading Google and making a lot of money in Google and you're like, oh my God, there's a squeeze, let's load up long. No ideal. So if it's not an ideal, which means that the parameters are perfect for the long side, it may go up, but it actually absolutely has a chance of going down. And in fact, I've seen that more often than not, where if the move does happen, it may be lackluster without the ideal setup, but also it has an opportunity to fall apart. So guess what? Just don't take that squeeze. Wait for ideal. So profitable versus unprofitable trades. Honing your edge first. Look, ideal squeeze. The nice thing about the ideal squeeze, it is so like there's not a shadow of a doubt when there's an ideal squeeze or not. So that's the best thing. Almost any tool that's out there, it can be interpreted differently. It's like, well, there's no, it's there or it's not there. Period, end. So no more guessing. Essentially only the best setups essentially flash. And this weeds out hundreds, if not thousands, of mediocre trades for the rest of your trading career. Think of the hundreds of trades that you won't take in the future, okay, that might have been frustrating. You can just pass on them now because you can see without a shadow of a doubt that it's not worth taking. So trade less. You could do a little bit bigger bets if you're comfortable with that. But you're not going to get burnt out, chasing all the stuff that's not necessarily in your best interest. Second, automated highest probability parameters. Each time frame is dialed in to its back-tested highest probability setting. Third, what stocks to trade, okay? This part's important. Amazon. I'm a huge fan of Amazon. Over the course of the last year, there was only one bar that set up for an ideal squeeze, and it did go higher, but it was pretty sloppy. And this squeeze here worked, and of course this was also into earnings, but it wasn't ideal. Okay, so we missed that. You missed that little pop on Amazon, but the most important thing is there are plenty of companies out there that aren't Amazon, that aren't the Mag 7, okay, that are setting up squeezes, ideal squeezes all the time. Western Digital, I haven't traded this one in a while, but it's been pretty clean with indexes that are pretty sloppy. Okay, that's so on the long side. So again, if you want to trade the short side, there's plenty of stocks out there on the short side, but on the long side, and the long side is, look, the markets kind of take the stairs up and the elevator down. So I do like trading the short side, but remember, markets just there's this drift higher, and if you don't want to fight that, for too long. And that's why we kind of want to look at stocks where their valuation is expanding and institutions are putting money into it, because you kind of get that continental drift higher in that case. STX, another one. Unlike some of the Mag 7 that are, kind of going through identity crisis right now, pretty steady. Hardly any blips there, hardly any stress. Pretty steady little pop, pretty steady little pop, bigger pop there as well. LITE, another one, again, these pretty clean moves. GILD, again, another big move. It's like, okay, over the course of the year, here's ideal. This one didn't flash ideal. It did work. So just because it's not ideal doesn't mean it's not going to work. But you can see it was, maybe, you end up holding on to this for a while and it was kind of painful. Whereas when you get the ideal, you're kind of rocking and rolling right away. So the hardest part of trading these stocks like this is, and you want these stocks where institutions are fighting over themselves to buy shares. This is called valuation expansion, when something about the story changes, and this is now a company going from a $5 billion valuation to a $10 billion valuation. That's a lot different than a stock that's just kind of consolidating and the market essentially agrees that it's fairly priced, right? And this means quality companies, real revenue growth versus stock meme, stock flash in the pans, that kind of stuff. We all like trading Tesla and Nvidia, but there are times when they are super sloppy because the market agrees that the stock is fairly priced. So you're not going to see a lot of trends to the upside or trends to the downside. You're going to see back and forth. Back and forth is fine, but it's easier to get into kind of a trending stock and just sit on it and let your options or your stock grow versus kind of batting back and forth all the time. So how do we find these? So I'm a big fan of the IBD 50 tools. That's IBD Investor's Business Daily. So they have the IBD 50, the Growth 250, a couple of other ones like that. And they have these great technicals, but they're backed by true fundamentals. And these are companies going through growth spurts, kind of like what Tesla did in 2020. Not every stock is just going up all the time. A stock kind of explodes in valuation and then finds kind of a new settling point. It's going to sit there for a while until it can kind of reinvent itself again. If you remember Microsoft, from 2000 to 2012, it did absolutely nothing, and then it reinvented itself and grew again. So it is very, very time consuming to go through all of these each day and see which ones are setting up for a squeeze, and now which ones are setting up an ideal squeeze, because there's thousands of potential companies out there. So for 15 plus years, I have used TradeStation's radar screen to do just that. So this is my TradeStation radar screen, and I have like 800 stocks on here, and I can sit there and say like, okay, great, FCX has a squeeze, okay, and the moving averages are stacked positive, and all the things. So I could see it here all at a glance. And I love TradeStation, but TradeStation's kind of old school. A lot of people today using Thinkorswim, TradingView, and this is really hard to replicate on other platforms. And so one of the things we've done recently, and it's beta, but I'm super excited about this. So this is our member dashboard, and it just shows kind of all the services that we offer. But we now have something called Radar Screen. And Radar Screen now is basically taking the TradeStation dashboard that I've had all these years and now putting it online with all the key columns that I want, with most importantly, you can now see when these are in an ideal squeeze. So here's some stocks, and you can see, here's a squeeze, but it's recently over. This one's in a squeeze, but it's not ideal. Oh, here's an ideal squeeze. Awesome. Here's an ideal squeeze. What's the symbol? APLD, AXSM. Great. So now, and all of a sudden you've got, you can see the 52% weak range, the relative strength versus the S&P 500, which is kind of a number not a lot of people pay attention to, but it's hugely important. Short percent float. It's always nice when you see that kind of high short float. Of course, the sector that it's in and all that kind of fun stuff. And so this is something that's been super, super excited about. So first of all, this isn't like a scan where you put in the parameters and you're going to go through 10,000 stocks and you're going to come up with, this hit list of 1,000 stocks, and you got to figure out of those thousands, which 3 are you going to take? Okay. So we have added, what we do on this is it's a curated list of stocks. It's about 800 stocks, give or take. The usual suspects, the Mag 7, the top 20 or so stocks in every key sector, tech, semis, healthcare, you name it, industrials, materials, on and on and on. So those are all there. But more importantly, we've also added the key, like IBD 50, the Growth 250, those kind of things as well are in there, and we update those each week. So now, all of a sudden, instead of, you can go in and if you want to see the chart, you can click on it and say, oh yeah, look, there's the squeeze and all that kind of stuff. And so you can go in now and just kind of see all this. Now, it's funny, I talked about this last week, and I was super excited about it because I could now scroll up and down and say like, oh my gosh, look at all these cool things. that we can look at now, and we can just kind of scroll. And so here, like here it is right here. And we could just say like, okay, great. I can scroll down and say, okay, where's the ideal and where's the ideal and where's the ideal? But this is a work in progress. And so I was asking David about this, and David had a couple of comments. And so the first thing he said was like, okay, because he runs, he's a genius in the background running a lot of information. And so first of all, what we can see now is any squeezes that are ideal, okay? Instead of having to go through 800 charts, there's a list, okay, and you can see them right away. Second, what we have found is that any ideal squeezes on stocks that have relative strength, not RSI like the RSI index, but relative strength versus the S&Ps of 70% or more has by far the highest probability of success. And ideal squeezes on those kind of stocks work the best. Okay, so if Meta ain't cutting it, that's why. Okay, so you want to go where the action is. And so what's great about this is now you can cross-reference and just say, okay, I want to know, is there an ideal squeeze? Okay, and what's the relative strength? 99%. Awesome. Here's an ideal squeeze. What's the relative strength? 92%. Awesome. Okay, so now all of a sudden you're going to narrow that down even more. What David recently just did, and this wasn't even active last week, is he's now added a filter. And so on the filter, you can say, you know what? I just want to see ideal squeezes. Their 52-week range is 85%, meaning they're 15% or less off their all-time 52-week highs. And I want to see RS of 85% or above. And when you do that, what happens is what's left is only the stocks that meet that criteria. So here, look, we'll do that live. So here it is. And if I'm gonna drag this down, we're gonna say like, okay, here's all the stocks, that are on this list. All right, it's a lot of stocks. Now, if I just want to say, you know what? Let me just see which ones are in an ideal squeeze. Okay, so now this has been cut quite a bit. So I can say like RTX, CRWV, and BLLN. They're all in ideal squeezes. Now, if I look at the 52-week range, BLLN, it's 16% of its range, meaning it's near its lows. Okay, so I'm not interested in that. CRWV, 40%, not super interested in that, but RTX, awesome. Let's do that. Semis, they all fit the bill as well, so it's great. Okay, so that's great. So now you can scroll down, you can see that here's everything that's in an ideal squeeze. Okay, but you know what? Let's cut this down even more. I want to do 52% week range is 85%. Okay, so I don't want to see any 16%. I don't care. I don't want to see that. And then let's do RS. Let's do RS 70. 85 is. We don't need to go that strict. Let's go 70. I can do this. 80. Okay, so now all of a sudden the only things showing up, okay, so like key Chinese stocks, there's no stocks in this section that match the criteria. That's why there's nothing there. Rare earths, there's nothing in there that meets the criteria. Okay, the Grok list of growth stocks, no stocks meet the criteria. So if I go to aerospace, there's 4. So they're all in ideal squeeze. The relative strength is all above 85%. Okay, so you got RTX, NOC, et cetera, et cetera. So now this is a very, very manageable list of swing trades that are out there. Okay, so suddenly that's pretty awesome. So here's some of these. So semis, they're in an ideal squeeze right now. That's pretty solid. So you can see that the Squeeze Pro is there, and guess what? This happens to be ideal. It's the first ideal squeeze we've had in about 3 or 4 months in the semis. If we look at RTX, same thing. You got the arrows, ideal squeeze. And you can see over here, hey, it's an ideal squeeze, heads up. And then if we look at XLV, same thing. You had an ideal squeeze here, a nice little pop. You can see that there was a squeeze here. It didn't flash ideal though, and it did work. And they can work. But again, it just wasn't the ideal stuff. And then we got an ideal squeeze setting up right now. LRCX has an ideal squeeze right now. So it's interesting like this because, and if you think of this, it's a little bit of the changing of the guard. NVIDIA right now is interesting, but it's range bound. LRCX is attracting new capital. Its valuation is expanding. And that's what this is telling us. And it's especially intriguing in a market right now that's kind of all over the place. And yeah, look, I like to short. There's plenty of stuff out there to short, especially in the indexes. I prefer to do SPX and NDX because you got the 60-40 tax treatment. 60% of all the gains, even day trading gains, are taxed as long-term capital gains, just like futures. And there's no wash sale rules. Like that's not there either, just like futures. So if I'm going to short something, I'm likely going to buy puts on the indexes or sell call credit spreads on the indexes. And then if I'm going to buy something, I'm likely going to do a swing trade on a stock. So that's kind of the mode that I like to do. Yeah, I'll day trade in the SPX and NDX. If I'm going to short something, I'm just going to short the market. Why short an individual stock when you can just short the market? To me, it's just a lot cleaner. And then I'm going to find these unique opportunities, these honey badger, these ideal squeezes that come up for swing longs or day trade longs if it's a smaller time frame. Now, what about something like silver? So silver, and this is where in 2020 I traded Tesla a lot, and this is the same thing that happened to Tesla. When a stock gets so parabolic, you're just not going to see any squeezes on the daily chart because it's too volatile. That is when something like that, you're like, oh my God, it's untradeable. That's when you drop down to the 30-minute chart or the 1-hour chart. And remember, the 30-minute and the 1-hour chart now are a setup ideally for the setup. So now you can see that even though silver's going insane, here's a setup. You go from 76 to 80, or if you held on, it went more. Here's a setup, going from 84 to 88. Here's a setup, et cetera, et cetera. So again, even though it's on the daily chart, it's insane. You can drop down to a 30-minute or an hourly chart, and there's plenty of setups that come up, which is great. And I did a lot of my Tesla trades like that. Even some of the $1 million trades were off of 30-minute charts, just because the daily chart was so parabolic. A 30-minute squeeze could turn in easily into a 30-point run, 60-point run on Tesla. Now, the other thing that we've done here is, in addition to the Squeeze Ultra, is that we have these labels here. And what these labels do is they tell you what's going on different time frames. So here's the 1-hour chart. And what this is telling you is that at the time of this, that there was an ideal arrows on the daily chart, there were ideal arrows on the 3-day chart, and there were ideal arrows on the weekly chart. So this is telling you at a glance that there is stuff happening on larger time frames that you want to pay attention to. And that's sometimes when the biggest trades come together, is that if you've got multiple time frames all working together like that. Okay. So getting moves like this require two things. First of all, you need a reliable tool that's going to give you an edge. And then, and you can absolutely do the stocks. A lot of people I know just trade the stocks. Frankly, there's a lot of benefit to that. You're not dealing with premium decay. You're not dealing with expiration. The only thing you're doing is tying up more capital. If you have a large account, that's fine. If you have a smaller account, using options for leverage is a great way to do it. And I always say, with something like swing trading, give yourself the gift of time. Go out at least 30 days off of a daily chart. Buy an in-the-money call or do a call debit spread. Obviously, you could sell a put credit spread. But the main thing is you want to have an expiration that's far enough to allow the squeeze to unfold and to work. Typically, squeezes last 8 to 10 days on a daily chart after they fire. So you just want to give it some room. So that's all well and good. So the squeeze is great. I've used it. I discovered the squeeze, 20 years ago now. Obviously, I love it. I wrote a book about it, Mastering the Trade. The original squeeze, it's a free tool. It's all over the internet, and which I think is great. It's helped a lot of people. I had one 7-figure trade using the free squeeze. That was in January of 2014 on Tesla. With the Squeeze Pro, I had 9 7-figure trades. And collectively thousands of trading hours in research, I created the Squeeze Ultra to simply narrow down the best and highest probability trades regardless of time frame. And these days I kind of tend to do shorter term trades for, instead of bigger swing trades. And it's just more kind of, seasons of life kind of change. It's like I take some more time off trading. So I want to all right, Tuesday, Wednesday, Thursday, I'm going to trade actively, and then I just want to relax. But the Squeeze Ultra's got me excited enough to time to set up another big account for these kind of swing trades again. And that's something to start doing that and posting those trades in the room as well. So not only does it pinpoint moments in time when you can look forward to a greater than expected move, but so important, it is superior at keeping you out of bad or meh trades. And if you've got a group of 100 trades, if you can cut out 10 bad ones, that is going to make a significant impact on your results. And again, this was the squeeze that I was using back in 2020 on Tesla. That was obviously pre-split. And this was one of my $1 million trades. And what's nice is, had I had the Squeeze Ultra, it's like in this case, I intuitively knew that was one I wanted to take, and the Squeeze Ultra confirmed it. Whereas this was one that I didn't take, and guess what? There was no arrows there. So my thought with this is just like, okay, I intuitively could recognize that was a good squeeze, and now you can too. And I think that's kind of the main point of that. So the Squeeze Ultra is all about timing. Without this, it's very easy to get caught up into trading on emotion, closing trades too early, entering trades without an edge, entering trades out of boredom or with no clear signal, hanging on to trades that aren't working, adding to losing positions. But with the Squeeze Ultra, essentially you're patient. You don't chase moves because there's either an arrow or there's not an arrow. You don't stay in too long. It's very clear, like, okay, the trade's over, let's get out. You don't get in too early, like I did with Google and had 3.5 weeks of absolute hell before I got the payoff. And you can absolutely define your risk parameters, which is great. So the settings are refined to highlight what is proven to be the highest probability squeezes for the best conditions, the cleanest setup, including refined settings for the OG red dots on daily charts. You'll notice if you look at the Squeeze Ultra versus OG Squeeze and Squeeze Pro, the dots show up differently. Okay, the Ultra is refined even on the daily chart for the best parameters for those ideal squeezes. So, and you'll get a picture perfect visual when the ideal ultimate conditions for a high performance, high probability squeeze are being met in real time. The danger in trading is if you don't have something like this, it's easy to you buy the top, you get excited, and then you have denial. And a lot of times is, another trader's capitulation and despondence is your perfect entry. A lot of times people will chase something, they buy the breakout, and then they get stopped out on a normal pullback, and that normal pullback is setting up an ultimate squeeze. And so with the squeeze, it's nice because you're naturally kind of getting in when it's quiet. Think of it as your job is to be Walmart, right? Walmart doesn't buy, Walmart doesn't stay in business because it buys hot dogs here and sells them here. What it does is it buys hot dogs here in anticipation of future demand, like Memorial Day, and then sells them. So that's what we do as traders too. The squeeze essentially allows you to get the stock or the underlying option at a discount to what it's going to be 2 or 3 weeks from now. And then for the people that are chasing it, the thrill and the euphoria, you're just giving your shares off to them. That's your job. You're buying, buying cheap, buying at a discount, and then selling it. And that's really all trading is. So, and consistency. So I love the occasional home run. I mean, no complaints there. But, I also think the idea of, really getting into a groove of targeting. What's your income goals? 2.5% to 5% gains is reasonable. If you do that each month, it's even more reasonable. If you do it each week, you got to be a little bit more aggressive. It's going to be different for everyone. 2020 was probably my best year in terms of a percent return annually. It was 1,200%. That's not what I was going for. My goal is simply to say, like, okay, let's see if I can double my account and wire money out along the way. And then sometimes it does much better because I'm just following the setups. Other times are tougher when I'm not following the setups, right? So the Squeeze Ultra means I can trade less, essentially, and make more. So my updates have turned the regular squeeze from a solid indicator into an improved, souped-up signal and complete trading system that works on any market on any time frame. And you can scan, which is great. So the biggest barrier to enjoying solid gains with options, it's essentially timing. So if you buy calls on something that's not ready to go, of course, it's just a decaying asset. If you're an options trader, of course, you understand the importance of theta decay. But even if you're selling premium, selling, say, a put credit spread or selling naked puts, you ideally want the stock to not flush and to go up. And so if you prefer to like sell put credit spreads, great. You get a Squeeze Ultra, sell put credit spreads. Your odds of not having too many headaches on that are going to be pretty high. So when you get the time and the direction right, you can do beautiful things with leverage. Okay. Now, one thing is I know there's a lot of people out there teaching the squeeze, and I would just say be careful learning the squeeze outside of simpler trading. I'm the one who made this, so I kind of know it pretty well. And you can, if you want to learn from someone who created it, or learn from someone who kind of saw it and borrowed it. I'm sure it's both good information, but a lot of times, if I want to learn something, I go straight to the source. Then you kind of understand all the nuances that are involved in it. I love this message from Mark Douglas. Consistent losers do almost everything to avoid accepting the reality that no matter how good a trade looks, it could lose. So what I love about the Squeeze Ultra is it really does define the highest probability edge for the upside, which is great. And then also, and I'll talk about in the upcoming class, there's also a very defined, hey, it's no longer working, just get out and cut your losses and move on. And it doesn't happen, the win rate is really high, but it's not 100%. But the question is like, okay, as long as it's clear when to get in and when to get out, and super clear on what not to do, then this becomes, a pretty easy game. So a part of this too is just saving yourself from yourself. The markets are designed specifically to manipulate our minds and get us to chase moves when they're about to end and to hold on to losing positions too long. So big trades once in a while are nice. I talked about SPX every once in a while. I will have a bigger trade in the SPX, though I tend to not, I'm not really looking for bigger moves on those. It's more about the premium. This is a real photo that I took on the Stratosphere. I was scared to death, and I had an adrenaline rush for the next 24 hours and couldn't sleep. That's not how you want to trade. You want it to be kind of calm, cool, and collected. I do like the consistency of being able to manage my trades. It's simple enough that I can, just manage it on my cell phone. And to me, that just makes it a lot easier. You have your positions, there's your squeezes, bada boom, bada bing, and it's done. So if you liked what I've shared so far, when it comes to learning a new strategy or a new tool, it's best to dive in and get to know it intimately in a focused setting so you don't have to experiment with trial and error, which can cost you money. It takes dedication to first learn how the system works and when to apply it in various market conditions. And it also requires real-time live market analysis in order to fully understand the functionality. Trading is kind of like golf. You can read 10 books on golf, and if you've never played golf before, you could walk up to that first tee and you could know more about golf and the technicalities of golf and the history of golf more than the other players. But if those other players have spent time hitting the ball, there is no way you're going to be able to compete with them because, the first time swinging a club after reading 10 books isn't going to help you at all. And it's the same thing in trading. It's really, really important to learn trading in a live environment. And so, it's great to read books. It's great to look at a PowerPoint like this, but it's a live environment that really, that's how you practice swinging the club. And, you kind of got to get those reps in. So the Squeeze Ultra Accelerator class is going to come up in a couple of weeks on Saturday, February 28th. It'll be from 12 to 4 Central Time. So what does this include? So there's a basic, kind of basic part of this where you get the actual Squeeze Ultra indicator. You get access to the Saturday class. You're going to have access to the indicator install session. As a bonus, you're going to get the early in and out pro indicator. That's if you saw the bars I was using that were colored, that's how you use to time the exit of the trade. And as another bonus, okay, the radar screen that I showed you, we have not released that to the public yet, and we aren't going to release it to the public anytime soon. So you are the only ones that will have access to that. And you'll get 60 days included, and it's a non-renewal, so you don't need to worry about, if you don't like it, that's fine. If at some point you want to get it, then that's an option. But for the first, 60 days, you can play around with it and say you like it. Now, the premium version, of course, will have all those things that I just discussed, but then it'll also include these 2 other tools, and I talked about them briefly, but it's the Multi-Squeeze Ultra Indicator And that's the one that we saw on various time frames where you could see like, oh my gosh, there's a squeeze on the weekly chart and an ultra squeeze on the daily chart. And the stats tool. And what the stats tool will do was give you an idea of like, hey, the average ideal squeeze has moved 30 points. And of the last 7, 6 of them worked. So it'll tell you all that, which is great. And then and the only thing the premium doesn't include is essentially time on the golf course. Time live trading. And so the elite package, includes obviously everything included in basic and premium, but it also includes 4 days of live trading. We're going to do like 2 live trading days in March, and then we're going to do 2 in April. I don't like doing 4 back to back because, I want to let's spend a day together trading and then go out and do it on your own for a couple of weeks. And then we're going to come together again. What question did you have? What did you learn? What kind of things happen. And for those of you that are, I'm in our MTT room, the Mastering the Trade room. So if you're a member there or you join that, I'm in there. I'm on the mic a couple times a week in there and posting trades in there as well. So if questions come up. And so that's that. So let me bring up the page here. And then happy to answer questions if my voice doesn't give out here. All right, let's bring up the web page. And the web page, especially with everybody kind of going to it can take a minute to come up. So just, you give it 5 or 10 seconds here. So again, if you go to simplertrading.com/squeeze ultra, and then you'll see that LornaBot posted a link up in the presenters post. You'll go through and say, okay, here is the basic, here's the premium, here's the elite, and then you'll see all the stuff that's included or not included, just like I reviewed. And then if you want to grab it, and the nice thing is that we're not waiting weeks to release the tool. If you get it tonight, you'll get the tool. So that's kind of nice. You'll get it fairly quickly. And then the other thing I wouldn't say it's urgent, but just kind of an FYI. We'll go over. So the other thing, and I think this is a real big deal. This is something in terms of talking about, talk about making a trader's life easier. And, it's essentially like if you're in a cave and you're digging for gold, it'd be a lot easier if there was an X marks a spot, like where the gold was. And that's kind of how I look at this. It's like the gold is going to be where the ideal, out of the 800 stocks that are on there, the potential gold is going to say ideal. So it's kind of an X marks the spot, which I think is way cool. The early in and out pro, this is the bonus. And you can see like what'll happen is that, if you're in a squeeze, and as long as the bars are blue, light blue, that's great. But if they turn dark blue, that's your exit signal. So easy peasy, right? Now, even though the class is on February 28th, on February 20th, which is this Friday from 1:30 to 3, I'm going to do like a prequel class. And on the class, we'll do, we'll talk, we'll look at the markets, we'll do a little live trading, but it's also going to be like, hey, what instruments do you trade? What position size? What position size should you do? What kind of trading plan should you have for something like that? And that'll also help you get prepped, not only how to use your tool, but how to kind of set yourself up for success based on your own trading journey, and kind of get you up to speed before we get together for more of kind of the heavy lifting on the 28th, which is going to dive into essentially the parameters, a lot more specifics. And, what's the stop loss look like? What's the checklist for getting into a trade? What's the checklist for getting out of the trade? All the fun things there. And there'll be another one on February 27th. That'll be from 1 to 2 Central. And again, this one will focus on kind of the mental game of trading and things like that. And believe it or not, I know a lot of times people are like, just give me the setup. But, I can give you the perfect setup. But if your mental game is screwed, it's not going to work. Because, and I've seen this happen, because what happens is, your psychology will overwrite the plan. Now, if you're disciplined enough, you're like, it doesn't matter what my, I could feel a lot of euphoria and I just got 5 winning trades in a row. I don't care. I'm not going to overrule my plan. Awesome. Most traders can't do that. So if you can do that, you're way ahead of everybody else. Or, man, my last 5 trades didn't work. What am I going to do now? I'm scared of this next trade. It's that's not how trading works, right? You get the setup and you take the setup, and it's so important to kind of get into that habit. So we'll talk about that. So, so we talked about this, the basic package, which is $9.97. So you get the strategy class, the Squeeze Ultra indicators and bonuses, and the class will take place on the 28th of February from 12 to 4. And if you can't make it live, that's okay. We'll record it, and then you can watch the recording at your leisure. It'll also include, of course, the new Squeeze Ultra, which says, hey, there's arrows. Do I buy this? And that makes it pretty simple, right? And remember that the Squeeze Ultra not only shows the ideal conditions, the Squeeze Ultra automatically adapts to market volatility using 3 dynamic filters. And it's so important, especially in this kind of a market like that. So these extra tools, if I maybe didn't show them as much as the other ones, so you're going to have the stats tool, and the stats tool will essentially say, hey, you know what? There's been 23 squeezes, 9 of them fired long. The average post-squeeze move on NVIDIA on this 5-minute chart, was 50. I think it was a 5-minute chart. It'll show you that. And then for the multi-tools, essentially you can say like, okay, is there a Squeeze Ultra on these other time frames? And if there is, they're going to be white. And so, and that's pretty cool. So these are the live trading days. This one, just FYI, is going to be moved to the 16th. So that will be updated. And then we've got the first one will be on March 5th, and then March 26th, and then it'll be the 16th, and then the 21st. So those will be coming up. And then we do accept PayPal credit. We've got an arrangement with them. So meaning when you go to checkout, if you hit PayPal credit, essentially you don't get charged for 6 months, and you don't have to make any payments or pay any interest. So we've had some traders do that. And it's always cool to hear like, yeah, I did it that way, and then in 6 months I made enough money to pay it off. And it's always cool to hear that story. Obviously, that's not anything can't guarantee that's going to happen for you or anything like that. But, we've heard that a lot, and it's always cool. It's always cool when that happens. So right now the indicators are for Thinkorswim or TradingView. If you have E-Trade, Fidelity or anything like that, so the 2 things you can do, one, Thinkorswim is free. You could just download it, throw in $100. You'll never get charged anything. And then you can just at least watch the tool on there and still trade in E-Trade and Fidelity or whatever your platform is. That's totally fine. So we have a lot of people that do that. And then obviously the radar screen is nice because it doesn't matter what platform you have. If you can access the radar screen, then you can see what has the ideal squeeze on there. If you have any questions at the moment, you can give us a call, 512-266-8659, or email us, support@simplertrading.com. And again, just to kind of review those, and I thought the other thing that was cool too is we put a list of all the stocks from the list that are in ideal squeezes right now. So if you want to copy those out, if you want to look at them, but all these stocks as of today are in ideal squeezes, and you can take a look at them. And look, it used to be we'd see like, oh, show me a list of all the stocks in daily squeezes, and there could be 210 stocks on there, but there's only 3, 6, 8, there's like 15, 16 stocks that meet the criteria right now for an ideal squeeze. So gosh, it makes it so easy to narrow it down, which I think is super cool. All right, so I'll leave this on here. I'm just going to put this up here as kind of a reminder of what the web page looks like. There's the link. And then I'm just kind of looking through some of the questions here. So, yeah, so what exactly qualifies as an ideal squeeze? Yeah, so there's a combination of things there. So first of all, an ideal squeeze is only going to show up if conditions for the possibility of more upside exist. Okay, so there's not an ideal for the downside. So basically what I've found over the years is that, conditions have to be damn near perfect to get an edge to the upside. If you want a high probability moment in time where you're getting in at a high probability moment in time versus like, oh, I'm here, I'm wondering what's going to happen. And you're looking for a greater than expected move, which is a move that's greater than even the market makers have priced in. So that's when the options, get really exciting. And so that's the main thing there. So that it'll highlight that. Do the arrows repaint or change after the fact? So once they're printed, they're there, but they can change intra-bar. So it's like, oh, it's ideal, oh, not ideal. It's ideal, not ideal. And then once the bar's done, yeah, it's locked in there. Does this tell me exactly when to enter and exit, or is discretion still required? So, so for that, this is what we're going to talk about in the Saturday class. And so the arrow will tell you that the conditions are like, hey, they're great. But in the class, we're going to talk about entry because, here's my rule of thumb. So here's the SPX, like daily chart of the SPX. Okay. Back in October, we had some ideal squeezes. Now, if I see an ideal squeeze, okay, you can see the arrows, and we're right here, I'm likely not going to buy it because I missed it. So my rule of thumb is that when I see arrows, then what I want to do is essentially between kind of the 8, between the 8 and 21 EMAs, I will scale in. So, it's like, okay, here's an arrow, great. We're and we can fall below it. I like that too. That's fine. So I'm like, okay, I'm gonna pick it up. Or like this is and talk about ideal. So it's looking good, and you get that 1 day flush, and it goes all the way to the 21 EMA. I'll already have orders sitting there. Like I'm wanting that to happen. Because if you don't do that, what's gonna happen is the flush is gonna come. And you're like, oh God, is it gonna keep going down? You want the flush, and the markets are designed for that. They want to shake out the weak hands. So that's what I mean by that is I want to, if I see the ideal squeeze, I'm not going to buy right here, so that's why I got to watch it. Right. So if I see, oh, ideal squeeze, great. Yeah, here we are. Cause then I want to be ready for that. Right. So hopefully that makes sense, but that's the kind of stuff we'll talk about on Saturday. Where do the stops come in? So for the stops, what I like to use, let me see if I've got this on here. Yeah. So we'll talk about this too, is I'm a fan of Keltner channels. So typically there's a specific Keltner channel that I'll look at, and if we close below that, I stop it out. And that's kind of a good, it's kind of a good rhythm. So I'll use these Keltner channels for targets and stops. So we'll talk about that during the Saturday class too. How often does this fail? What do losing trades look like? So yeah, so I showed one example of that on Google. We can actually go look at it right now. And again, what I found on this is that the daily charts are certainly going to be more powerful than a 5-minute chart. 5-minute chart can be pretty whippy, but you can see right here where we had the ideal squeeze, and essentially it failed. So it didn't fall apart, but I would say that's a failure. Now, could you have gotten back in here? Yeah. But that's what kind of looking at it. When you see the ideal, it's just everything is so bullish with that. But like for example, here it's not, right? So you don't see the ideal. But I would just say it's a normal stop out. So it's typically on something like that. It's like, oh, okay, that didn't work, so it just got stopped out. And again, that's stuff we'll go into detail on Saturday. Is this replacing the Squeeze Pro or meant to be used alongside it? So absolutely replacing it. You can't, so I'm just kind of watching this right now for comparison because people ask, but you could just take this off your chart. Old habits die hard. So I've looked at this for so long. So I kind of like to see kind of what it's doing. You will see there's some similarities. So you can see all the dots here, and yeah, there's dots here too, right? They're different because they're different parameters, and you can see these dots are the same. These are different. So you got black dots here, but these are red dots. Red dots are more powerful. So there's some differences, right? So I'm watching both right now, and so if you're a student of the Squeeze Pro and you've used it for a long time, that's kind of what I'm doing right now. But really, all I care about is the arrows. And so at some point, what I'll do is just close this one down and just watch this. If I already own the previous squeeze tools, why do I need to buy again? I asked that. I sent Tim Cook an email. I said, hey, I own the iPhone, 10, 12, 14, 15. Why do I need to buy the 18? And he said it was because, there was a lot of work put into it. And it's kind of similar. So there are there are tools we release that are free upgrades. And I said before, it's like, hey, if we decide like, on the Squeeze Ultra, we're going to add an arrow to also show ideal down squeezes, that's going to be a free upgrade. It's not a complete overhaul that took thousands of collective hours to kind of retool. And so that's just kind of how we measure it. Is this an upgrade, or is this an entire new kind of dichotomy based on kind of like the collective man and woman hours that were put into it? And so that's just kind of the measurement of it. Is this a one-time purchase? Is there a subscription? So everything here, it's a one-time purchase. The only thing is that after the radar screen, if you want to keep it, I think it depends. There's different things we're looking at it, but kind of a modest monthly kind of a thing there. But otherwise, you don't have to pay like a licensing fee every year for the squeeze or anything like that. Does this work on futures, options, crypto during Globex? So the answer is yes. I typically don't do a lot during Globex. And so you want to kind of take that with a grain of salt because of the, the volume and stuff like that. But I'm a huge fan of Forex. I used to trade it a lot. I use it now more for kind of like for indicators and things like that. Gold, silver futures, bonds, all the things. All right. Oh, yeah. And then, so what's our live trading room? So we have a live trading room. Our main one is called the MTT room. So MTT stands for Mastering the Trade. So if that's the first you've heard of it, you just go to MTT room. And what's nice is you get in there, there's a lot of us in there, a lot of smart people in there too. They're posting their trades. So we're sharing our charts throughout the day. Here's what we're looking at. And we're also posting our trades in there, and it's a great community. And it's one of those things. The nice thing is on something like that, it's a premium community. So we have our guidelines. If someone in there wants to scream at people about politics, that's great. We're gonna mute you because we're there to talk about trading. We've got couple guys in there that have been muted for 3 years and they still pay. They just they can't spout off their opinions any longer, or not to anybody in the room. And we're pretty strict about that, not for any reason other than the only goal of that room is to help each other make money in the markets and have some camaraderie. And, if you want to take your money and go place ads in the Wall Street Journal about and express your political opinion, go for it. Yeah, I don't care what you do with your money. But that in that environment, the goal is to focus on making money and kind of, helping each other do that. And anything that kind of dissuades from that, we just mute you. And one guy's like, "Well, I'm going to cancel then if I can't spout off." Like, goodbye. Don't let the door hit you in the ass on the way out. So it's good, supportive environment. Ooh, all right. What other questions? My voice is starting to run out of gas here. It's always fun. It's always fun talking about trading and stuff like that. And then it's more fun to actually trade. So what I'm really hoping is that after this, you guys are like, you know what? This sounds awesome. You're going to join me for the Saturday class. We're going to do some live trading together because that's what's fun. This is good because I want to explain and show everybody what we're doing. But, the real fun is the actual trading. So I really like doing the live trading. I think that's a lot of fun. And, that's what I'm passionate about. All right. All right. Well, thank you all for joining. I'm going to just leave this page up here. We'll be hanging around. If you have questions, you can type them in and stuff like that. Otherwise, thank you for joining. I was looking at the markets tonight to see if there was anything, worth trading. And because sometimes it's fun to trade live, but S&Ps are pretty quiet. Gold's not too bad, but everything's pretty quiet tonight. All right. Anyway, so I hope especially for swing trading, I do think that this is a tool. I mean, this is the first indicator I've ever shown my wife, and she's like, "Oh, I get that." So I'm just kind of like, "Wow, that kind of hits home." My goal is to make this, you kind of walk the path to make it easier for people that are going to be walking the path after you. And so I think with this is probably, there's a lot of things I look at that probably required a lot of nuance, ticks, internals, how do you read this? How do you read that? But this isn't one of them. This is like a clear cut path to the forest. And so for that, I'm pretty excited. All right. Awesome. You all have a great, fantastic rest of your evening. For those of you in the MTT room, we'll see you there tomorrow. Enjoy the rest of your week. And I guess there's nothing really coming up. I was going to say happy something. It was Valentine's Day and all that kind of stuff. So all good there. All right. Have a great night, everybody. And